Good afternoon, everybody from Nairobi. We're looking forward to our daily update with EGM Securities. And no, please don't change the screen. Kevin made so much money from that recommendation at 5.25 to buy the dollar versus the lira. He's taken off and he's on the beach. No, I'm only joking. It's a pleasure to be speaking to Lawrence today. Lawrence, thanks for making the time.
Oh, thank you.
And Lawrence, you're going to talk us through a number of things. We're going to stay with the Turkish lira, right, for a little bit. So tell us what's happening.
The Turkish lira is more of a political thing. It's isolated. It's kind of, political antagonist, just putting more fuel to the fire. But either way, people still have to hedge against their emerging market futures risk, right? So now they turn to the rand.
So this was that big spike yesterday, 10% move.
Exactly. Because guys are trying to hedge, their risk. So the rand is very volatile. It's very liquid, and the South African Central Bank is, it's very independent. So obviously, investors are kind of looking for such a situation to hedge. So now you see this. So obviously, this is going to kind of retrace back once the market kind of get into their senses. So for the lira, they might look for political allies, maybe from Russia and China. Who knows?
We've seen some improvement today, right, Lawrence?
He's still talking, by the way.
He's still as we're speaking. Yes.
As you're speaking, he's still talking.
But isn't it a classic conundrum? He keeps saying he doesn't want to put up interest rates. If he doesn't put up interest rates, unless it's Mahathir Mohamad, who I must admit is the only person I know who managed to fight off a currency devaluation, isn't it the currency that gives?
Well, like I'm saying, it's political.
Yes.
So no one knows. If it was economic, we would now maybe throw in some ideas, but it's political. Who knows? Maybe some allies coming and kind of helping out. So it's mostly against the U.S. So with that, with that isolation and with the U.S., obviously trying to look for traders from China, who knows who will come in. But then again, it's the market. Let's see what happens.
Okay.
So my bet is it might retrace maybe to 6, maybe. It might retrace because, once the market has had enough of that, it might just retrace. But, let's see what happens. But then again, today I want to talk also about gold.
So because we haven't touched on commodities. And I saw yesterday it broke down through 1,200.
1,200.
So where are we now?
This is a very psychological level for traders, 1,200. So the reason for this is because of 3 main reasons. So the first reason is that, gold is very anti-dollar.
Yes.
The dollar has been gaining across board. Gold can't gain on dollar. So that is why you're seeing this. The other reason is that US equities are doing quite well. So, and investors are looking for the Fed to kind of, give a rate hike. So if I'm going to earn interest rates on equities in America, why would I want to buy gold which doesn't give me interest rates? So for investors are looking at it that way, and they're kind of now going for, the yen and also the dollar, as a safe haven. The other reason is that we've had a future sell-off for bullion. So even for the guys who are kind of long gold, they can't stay for long. They don't want to be the last guy, still holding gold at what levels? At maybe 1243. So they're kind of giving up now. So those are the 3 reasons why gold.
So capitulation is what you're saying.
Yes. So guys are looking at 1295 here. So today we're looking at what once the Americans come on, that market overlap. So we kind of see what happens. So it might tank lower or maybe go higher. I'm thinking it's going to go lower.
You do?
Yeah, I'm thinking it's going to go lower. There's no reason for it to go up again.
If you look at a longer term chart, where do you think we can be going here?
1180. Yeah, 1180. But then again, after that, there's nowhere else to go. It needs to go up. But mostly guys are kind of looking at, it's mostly too much risk right now.
Yes.
Trade wars, Turkey, the rand. We have Venezuela, we have Iran, we have Russia, we have China.
It's an uncertain world.
It's an uncertain
world. And normally
world.
In an uncertain world, gold is a proxy for uncertainty. But you're saying the strength of the dollar is overwhelming those things.
Don't forget Italy also. They had their own issue with politics, their political issues previously. So they're also afraid that what is happening in Turkey might also come to haunt them. If you look at Italy bond issues, right, they have a very huge spread between what Germany is having and what Spain is having. So it's a very uncertain world. So we kind of want to see where the market goes. I think it's the beauty of the market. So no one knows what is going to happen, but we all just, throw in our ideas out there and we see what happens.
Thank you very much. Pleasure speaking to you.
Same.
See you tomorrow.
Yeah, maybe I'll join Kevin next week.
Well, you'll have to recommend a trade like Kevin's.
Yeah.